Carol, high unemployment is taking its toll on consumer spending, which in turn is taking a toll on the bottom line. For more on the earnings front, let's bring in Robin Griffiths, Chief Technical Analyst at Cazenove Capital Management. He joins us from London. Mr. Griffiths, welcome to Bloomberg News, and tell us about that bottom line. What's it looking like?
Well, I think the secret is certain companies will be able to keep their costs very well under control. And unfortunately, the variable factor that lets them do that is the labor cost. Obviously, compared to China and India, the Western world and Europe in particular is a high, expensive labor market. And by laying people off or putting them on part-time, they can keep that cost under control. So it may well be that corporate profits do rather better than personal budgets going forward from here. I think that will be the secret. I mean, in the results season, results which are less bad than had been expected are quite likely. And the missing ingredient will be they've been able to keep costs under control.
Robin, let me just ask you about some of the trade we're seeing today over in Europe. You had a lot of takeover activity, M&A activity in a bunch of different sectors. Good sign, a sign to you, though, that maybe things are slowly getting back on track here?
I'm afraid I come down on the gloomy side answering that. The overall technical chart pattern for European markets, particularly Germany and France, is that they're in a bear market. The indices are making a pattern of falling highs and lows below falling moving averages, and that the rally from the March low quite clearly ended about 6 weeks ago. On both the CAC and the DAX, there is a very small head and shoulders top pattern, not dissimilar to the one on the S&P, and the so-called neckline of that was broken a few days ago. The good news is the prediction from that head and shoulders does not take you back down as low as the March low, but it almost certainly gives you a half to two-thirds retracement of the rally before we get our next buying opportunity.
Robin,
as
I'm
to
sorry.
Timing,
yeah, Robin, I'm sorry. I was wondering, what's the aim between now and October?
what is the aim?
Yeah. Is it to preserve capital?
The aim is to absolutely preserve capital, possibly even park, if you like, in the short term in a government bond, which is already actually going up in price modestly, or just make sure you've got the cash, because the purchasing power of your cash will be increasing, even though you get no actual return on it.
Right.
And if you've got the money to buy the late October dip, which I'm pretty sure you are going to get, you will pick up some genuinely cheap stocks. And as long as the low is above the March low, that will then give a proper and more optimistic buying signal.
Robin Griffiths, Chief Technical Analyst at Cazenove Capital Management, joining us from London. Robin, thanks. Carol?